Hey everyone, this is Ronak Ahuja. I welcome you all again. In the previous sessions, we discussed the amendments to the TDS rates, the TCS rates, the new income tax slab, as well as the tax rates as per the old tax regime. In this session, we'll be discussing the rates of the surcharge as well as the amendments made to the tax audit report. These changes would be effective from the 1st of April 2025. Let's quickly start. So what is surcharge? A surcharge is nothing but an additional levy of tax that is paid on the basic income tax or the TDS or the TCS. The question is everyone required to pay it? The answer is no. Only the people which fall in the higher income group category would be required to pay surcharge. Please note, the rates of surcharge rolled out by the Finance Act 2025 would be payable on the TDS, TCS or advance tax calculated for the financial year 25-26. So let's quickly have a look at those rates. Let's first check the surcharge payable by individuals, HUFs, AOPs and BOIs. Surcharge payable on TDS, in case the TDS is deducted under these sections, the rates would be as per this slab. Please note, wherever the payments are made to the non-residents and the TDS deduction is made under these sections, then in such a case, surcharge would be additionally deducted from the payments being made to them. The rates of surcharge would be these: 10%, 15%, 25% and 37% based on the income slab in which it falls. Moving ahead, in case the TDS is deducted under the same subsections but the payment is being made to one resident, then in such a case, no surcharge will be payable. So, surcharge would be payable only in case the payments are being made to the non-residents and if covered under these sections. Moving ahead, if it is deducted under these sections, then in such a case, the rates would be these. However, there's a condition to that. The rates of surcharge would be a maximum of 25% in case the SAC opts for the new tax regime. This again is applicable only to the non-residents. In case the residents are being paid with the nature of payments as specified under these subsections, then in such a case, surcharge will not be payable. Moving ahead, where in case the salary is being paid whether to a resident or a non-resident and the person has opted for the old tax regime, then in such a case, these would be the surcharge rates. Further, where in case the payments are being made to the specified senior citizen specified under section 194P by the banks, then in such a case, the same rates of surcharge would be applicable. Note, the surcharge on AOPs having members only the companies, then in such a case, surcharge won't exceed 15%. Moving on, where any sort of dividend is paid under section 196D, surcharge rate applicable would be 15%, only if dividend income exceeds 100 lakhs. Again, this is applicable only to a non-resident. In case the payment is made to a resident, then in such a case, no surcharge would be applicable. Please note, the payments made only in case of section 192, that is salaries, or under section 194P would attract surcharge for both residents as well as the non-residents. In rest of the cases, no surcharge would be payable by the residents. Surcharge on TCS. Where in case payments are being made under section 206C, surcharge collectible would be at the rate these percentages as per the slabs provided here, subject to a maximum of 25% in case the SSC has opted for the new tax regime. Again, payments made to residents would not be subjected to surcharge. In case of winning from lotteries, where TD is deductible under Section 194B, surcharge would be at these rates. Again, this would be applicable only when the payment is being made to the non-residents. In case of residents, no surcharge is payable. Now, whether the advance tax is payable at the rates in force, surcharge would be payable at these rates: 10%, 15, 25 and 37% as per the income slabs provided therein. In this case, surcharge would be payable by both the resident as well as the non-resident. Note, surcharge on AOP, wherein the members are only companies, the surcharge won't exceed 15%. Now we move to surcharge rates applicable to AOPs, wherein all the members are companies. So, surcharge rates applicable on TDS, where in case TDS is deducted under these sections, surcharge would be applicable at the rate 10% and 15%. Again, this is applicable to non-residents only. No surcharge for residents. In case deducted under these sections, surcharge rates would be this. Again, not payable by residents. Now, when TCS is collected under section 206C, surcharge rates are these. Where in case payments are made for winning from lotteries to non-residents, surcharge would be this: 10% and 15%. Not payable by non-residents. Where in case advance tax is payable at the rates in force, the surcharge would be payable both by the residents as well as the non-residents at the rate 10%, 15, 25 and 37%. Moving on, surcharge payable by cooperative societies. Where in case TDS is paid under these sections, surcharge would be payable at the rate 7% or 12%, which is payable only in case of non-residents and not in case of residents. When deducted under these sections, this is again payable at the rate 7% or 12% as per the slab rate. Again, not payable by residents. In case TCS is collected under this section, at the rate 7% or 12%. If collectible under section 194B, at the rate 7% or 12%. Where in case advance tax is payable at the rates in force, again at the rate 7% or 12%. Here it is applicable to both the non-residents as well as the residents. Moving on, surcharge payable by partnership firms. In case of partnership firms, where TDS is deducted, it is payable at the rate 12% in case of these sections, and again in case of these sections at the rate 12%. In case of TCS, under 206C, again 12%, 194B, again 12%. In advance tax is payable at the rates in force, payable by both residents as well as non-residents. Moving forward, surcharge in case of companies. Now, surcharge in case where TDS is deducted under these sections, then in such a case, when TDS is deducted for companies other than the domestic companies, the rates of surcharge would be 2% and 5%. In case of domestic companies, not applicable. In case of these sections, again at the rate 2% and 5%. For domestic companies, not applicable. Where in case TCS is collected under 206C, 2% and 5% again, not applicable in case of domestic companies. Under 194B, 2% 5%, again not applicable. In case of advanced tax, where in case advanced tax is payable at the rates in force, then in such a case, 2% and 5% in case of companies other than the domestic companies. In case of domestic companies, at the rate 7% and 12%. So these were the rates of surcharge for TDS, TCS and advanced tax payable for the financial year 25-26. Now let's move to the next segment, which is amendments to the tax audit report. Please note, we won't be elaborately discussing on each of the amendment. For now, we'll just be highlighting the changes to the tax audit report. The main elaboration will be done in the next video. The first change to the tax audit report is the change to clause 12. Clause 12 requires us to report all the profits that have been taxable on a presumptive basis and have been credited to the P&L account. Thus, for this purpose, Section 44 BBC, which is an option available to the non-residents running businesses of a cruise ship operator, has also been included in this clause. The next change is in clause 19. Clause 19 requires us to report all the amounts that have been debited to the P&L account and are admissible under section 32, 33 and 35 of the Income Tax Act in respect of the investments and expenditures made thereunder. However, out of all the other sections, 4 sections have been deleted from this clause, namely 32AC, 32AD, 35AC and 35CCB. The reason for them being deleted is because these sections have been obsolete and the deductions are no longer available in these sections. Next change is in clause 21. Clause 21 subclause A requires us to report all the expenditures that have been debited to the P&L account that are in the nature of capital expenditure or personal expenditure or expenditure in respect of penalties or any other expenses that have been mentioned therein. One such expenditure that has been included by the government this time is the expenditures that are incurred to settle the proceedings that have been initiated under any law. This means wherever any expenditure is incurred to settle any sort of proceedings that have been initiated under any law and have been specified by the government to be reported under the tax audit report will have to be reported under this clause. Next is clause 22. Clause 22 requires us to report the amounts of interest inadmissible to the assessee because of the delayed payments to the MSME organizations. Please note, earlier we used to report only the amount of interest that was inadmissible. But from now on, we'll be including the amounts that are required to be paid to the MSME organizations during the entire previous year. Not only this, we will be further required to report out of the above what amount was paid within the due date and what wasn't. Clause 26. Clause 26 deals with certain deductions that are allowable only on the payment basis. Such payments are the payments that are referred to under Section 43B, such as taxes, duties, or any other statutory payment. The new amendment to Clause 26 simply improves the precise language, thereby bringing clarity on what all is to be reported. The next is omission of Clause 28 and 29. Clause 28 requires us to report the details of the transactions where the firm or the company receives the share of some other company either at no consideration or at lower consideration. Further, Clause 29 required us to report the details where the company receives consideration in excess of the market value for issuing its own shares. So, wherever company issues its shares and receives a consideration in excess of fair market value, then reporting under Clause 29 is required. However, as per the recent amendment, these two clauses have been removed from the tax audit report. Next is Clause 31, Subclause A and B. Clause 31, Subclause A and B requires us to report the particulars of the transactions that include acceptance of loans or deposits or any specified sums which exceeds the limit specified under Section 269 SS. Earlier, we used to report only the amounts that are received as loan or deposits or as specified sums. But from now on, we'll have to specify the amounts as well as the nature of transactions. This means if the loans or deposits or the specified sum have been accepted by way of cash or by way of journal entries or through transfer of any asset or liability, it should be reported as such through the drop down that will be provided under Clause 31. Next is Clause 31, Subclause C. Clause 31, Subclause C requires us to report the particulars of the transactions, including the repayment of loans or the repayment of any specified advance beyond the permissible limit under Section 269T. Remember, earlier we used to report only the amounts, but this time we'll be reporting amounts along with the nature of the transactions. Say for example, if the repayment of loan or specified advance is made by way of cash or by way of non-account paid check or through journal entries or through transfer of any asset or liability, the same will have to be specified as such by help of a drop down which will be given in Clause 31. Next is Clause 36B. Clause 36B is newly introduced to the tax audit report, which would contain the details of the shares bought back by the company from the assessee. Say for example, if Mr. X sells shares of the company back to the company, then in such a case, the consideration received will have to be reported under Clause 36B. Along with the amount of consideration, the cost of acquisition of such shares will also be reported by the assessee. So, with this, we hope our efforts to simplify amendments for you have been helpful for you. Please do remember to share your feedback or questions in the comment section. Or alternatively, you can mail us at talklevies@gmail.com. Thank you and stay tuned for other videos.